Hello, all you lovely people out there. How are you doing? I'm Kate Hill, and I'm here to give you the best unbiased and honest commentary about our property markets, along with some fantastic hints and tips. So stay tuned today for all your latest property news. Interest rates are not likely to increase as much as many analysts are predicting. According to the head of the Commonwealth Bank, rates will increase but are unlikely to hit the 2.5% increase some are predicting by the end of the year. They say that would be the fastest pace of rate increase in decades, and analysts have often gotten well ahead of themselves in predicting what the rate of increase is likely to be. They predict a cash rate closer to 1.3% by the end of this year, before moving to a more modest 1.6% mid next year. They say that the increases will still have a modest impact on the housing market. One of the key questions in our minds, says CommBank, is where does the cash rate settle? And they think that there's actually quite a divergence across the market in terms of what the market is pricing for expectations versus what they think is going to actually occur. Extremely low vacancy rates continue to push rents higher, with SQM research figures showing the national average is 1.1%. SQM say that the national vacancy rate increased 0.1% in April but remains close to its lowest ever level. 6 of the 8 capital cities have vacancy rates well below 1%, with Sydney on 1.6, Melbourne on 1.9. Hobart and Adelaide have the lowest vacancy rates, with both at 0.4, while most regional areas are under 1%. While the small increase in vacancy rates means rental conditions have not deteriorated further, it is still very much a landlord's market. There are still far more would-be renters than landlords at this stage, and that's why we are still seeing rents continuing to rise strongly around the country. In the past month, rents rose 1.4%, following a 2.4% increase in the previous month. SQM says that the year to May, Brisbane house rents rose 21%, Sydney 19%, and Adelaide 20%. Following on from that, rent rises coupled with still very low interest rates means it is often cheaper to buy than rent in many Australian suburbs. CoreLogic figures show monthly mortgage repayments based on a median house price or unit price are cheaper than rents in 274 suburbs. 201 of those are unit markets, and the remainder are houses. There are 20 unit markets and 1 house market in Sydney where buying is cheaper, while in Melbourne 20 unit markets are cheaper. A monthly mortgage repayment for a unit in Darwin is $1,013 cheaper than renting. In Western Sydney, buying a unit in Auburn is $318 a month cheaper than renting, while in Rose Hill the difference is $266. In the inner Sydney market, buyers pay $203 a month less to buy rather than rent in Rosebery, while in Mascot it's $190 cheaper. In Melbourne, units in Carlton and Docklands are cheaper by $533 and $422 respectively, while in Perth, Wembley and West Leederville are cheaper by $797 and $785. Property prices in regional Australia continue to grow, with new figures showing an increase of almost 5% in the April quarter. This comes on the back of 24% growth in the past 12 months compared to 15% in the combined capital city markets. CoreLogic says that the Hunter Valley, New South Wales is still the strongest performing market for houses, with its values up 34% in the past 12 months. The Launceston and northeast region of Tasmania is the strongest performing unit market, with values up 31% in the past 12 months. CoreLogic say that the continuing outperformance of regional markets is a result of the move to working from home. They say that the regional areas are more affordable than the capital cities, no shock there, and those who can work at home take advantage of that. Although demographic data is significantly lagged, anecdotally, CoreLogic are still seeing a strong demand for regional housing supported by high internal migration rates. And finally, even if interest rates continue to rise, which let's face it, they probably will, most homeowners are well prepared to cope with it, according to Bankwest. Its customers have nearly tripled the rate of savings in offset accounts over the past 2 years, with 90% of their borrowers ahead in their repayments. Westpac says 72% of its customers are ahead on their mortgages. Bankwest says that many customers are in a better position than before the pandemic, and while many Australians are facing cost of living pressures, bank figures show plenty of customers have significant savings. We, as they say, have seen throughout the pandemic that savings balances were on the rise, and many homeowners took advantage of low interest rates to channel those savings into paying down their home loan, they say. Now, that behaviour is likely to prove extremely helpful for those who were able to pay extra off their home loan as we enter a period of rising inflation and cost of living pressures. We will keep you posted, as always, on all things property from around Australia as our year progresses. We're nearly halfway there, can you believe it? Don't forget to hit the subscribe and the like buttons if you are enjoying all this free, wonderful content, and I will see you soon. Bye.